everyone, welcome to Tuesday, and like we do every Tuesday, we have a look at the NZSX50 and see how it's performed for the week. But also I've had a great question come in and I really want to address that as well, and that was on the back of Air New Zealand, who I did my share and review on last week. So we will go back and look at Air New Zealand again. Now before I get started, remember this is general advice, it's education purposes only. It is certainly not intended for any individual circumstances whatsoever. If you're looking for personal advice, then you do need to go and have a chat to your own financial advisor or share broker or the likes, okay? And before I jump across as well, I really wanted to share with you that if you're looking at trying to get started in the share market, and this is a very, very elementary course, I'm going to be running a 5-week one starting on the 2nd of April, and it will, like I say, run for 5 weeks. They will be an hour each, and we will do it online. Very basic, very elementary, but it's a great place to start. And these are actually the tools that we use with the Retirement Commission when we go out and bring these courses to corporates. So a great way for you as an individual, as you might not be able to normally have access to that, to jump on and start learning. So I will make sure there's links to that and at the end of the session as well. Right, let's share my screen. Okay, up on the screen here, I have got the S&P NZSX50. So again, it's the top 50 companies on our stock exchange. Now, one thing that you can see here, last week we had a down period and it fell about just under 9.5%. The thing is we have seen a reasonable amount of volume on this as well. And it's obviously forming what we would refer to as a bit of a line of resistance. So if I hold my cursor on the green candle the week before, you will see that the market has hit that again last week and then it's fallen away. Okay, it hasn't fallen further, it hasn't fallen much. It hasn't fallen below that last green candle, but there's obviously a line of resistance there. Now that can be a good thing. We've already had it touch 3 points in the last few weeks, so it could be a good point that the market could go on further. I don't know. The things that I'm looking at though is with this last red candle, as you can see, I'll just move my cursor away, it's got a long tail, and that usually means that the buyers are still in control. So even though it closed lower for the week than what it opened, the buyers are still out there, which is a very, very good sign. I've got my moving averages on there, and with being the 15 and 30 week moving averages, it's still to the positive. So the 15 week is still going through the 30 week. So that too is a good sign. The other thing as well, when I look at the ATR, so the average true range down here, and divide that by the share price, we're still only just over about 1% volatility. I'll just quickly work the maths out for us. So yeah, so we're sitting at about 1.67% volatility. Again, in my view, it's nothing to be concerned about, and hopefully the market should still keep eventually rallying. What you do find is when the market hits a sign of resistance like this, then you will find that it will touch it on a few occasions, and hopefully the idea is that it will break through to the upside, which is great. We don't really have a line of support, too much of a line of support forming at this stage. Maybe down here at that 10,700 level, which it sort of hit that back in October last year, and also then again October 22. So that is actually quite interesting. Right, I will just stop sharing my screen and I will bring up the question that came in, because this is a very good one and I'd love to talk about it. Okay. So this person has said that they wished I had looked at the 10-year chart for Air New Zealand, and their thinking is that Air New Zealand is a good buy right now and just to hold it for a long time until it starts trading at pre-COVID levels. And they're wondering if this is a better strategy than buying the shares that are currently in an upward trend. So that to me is a great question. So let's jump on and share my screen again. So here we are here. I have pulled Air New Zealand up and I have gone right back 10 years. So that we're looking at, just here it's showing April. It doesn't quite fit on my screen. But this is really interesting because Air New Zealand back then, as you can see, was trading at about $1.28 and it meandered along, okay? But it did eventually hit a high point of $2.18, and that was in August 2017. So it took a long time. It took roughly 3 years, just over 3 years to reach that high point. Now that's the highest point that Air New Zealand has ever traded in. It then really started a downward pattern. These big red candles is what happened over COVID. And this has actually gone out to a monthly chart so that we can obviously see most of it. The interesting thing too is Air New Zealand was paying a regular dividend every sort of 6 months. And then obviously during COVID, as a lot of companies did, they stopped paying that dividend. Now, I don't invest just for the dividend. That to me is a byproduct. Now, I'm just going to run a 200 moving average on here and we will see what that looks like. So the 200 moving average, as you can see here, Air New Zealand, apart from pre-COVID levels, was trading a little bit above it, but basically it's been trending down. And like I discussed last week, it's still on a downward trajectory. And you can see here that just for the month of March, I'll even just go back now and pop it over a 2-year and hopefully to the weekly. So we can see here that last week, yeah, there was a little bit of positivity. It didn't rise much. It only went up 1 cent for the entire week. And for me, it's not a share I would buy. And even though this person said that they thought that it could be a good buy and hold strategy, for me, I do not like to try and pick bottoms because it's like the saying in investing is like trying to catch a falling knife. You're better off to go with the flow of the trend. So, which is the path of least resistance. So if you were looking to maybe short this stock, you could do that by contracts for difference, a CFD. However, bear in mind that the only way you can make double gains or large gains, if you like, is if the share went to zero. Now, Air New Zealand may not ever go to zero. I do remember a number of years ago, and we're talking a long time ago, that Air New Zealand did get bailed out by the government. And that's probably about when those shares started going up. Okay, that could have been around that time because I certainly remember a lot of rhetoric around the fact that, it can't go wrong, you've got the government involved, that sort of thing. I'm not sure if they're still involved. I think they are. I really don't know. Okay, but for my view, I do not want to try and buy a share that's in a long-term downward trend like this because it could still keep going down. When I look down here, I've got an indicator up and it's called the ATR and I put it over a 21-week period. So on an average, Air New Zealand could trade roughly, at the moment it's sitting at about 3 cents. And you might say that that's not much. But however, if you keep looking here, we've just got, we've gone sideways and now we've just gone down, down, down. And it wouldn't take much that if Air New Zealand suddenly fell to 50 cents, that's a huge amount of impact on your portfolio. So if we look here that it's gone up 1 cent, and that's 1.5% or just over 1.5% return, but it could go the other way. And that's what would concern me if I was buying Air New Zealand at the moment. I'm not the sort of investor that wants to try and pick tops or bottoms because you can so often be wrong. However, the price action and what the chart is telling you, in my view, is the path of least resistance. So in my view, Air New Zealand is showing that it is in a downward trend. And I want to be seeing these moving averages cross over. So let's go back to the 30, export that, and we'll put the 15 on there as well. And these aren't any magic numbers by any stretch of the imagination. I'll just change the color of that one. They're just what I use. So if you're using this sort of thing, the best thing is to be consistent and use the same ones all the time. I follow another gentleman who does another market, and he uses the 50 and 100 day. Okay, that's his preference, that's his choice. I like to use the 15 and 30. That's my preference, my choice. It's not set in stone. But you can see here that Air New Zealand, their moving averages crossed about September last year, and they're still trading below it. So these are reasons why I wouldn't want to be owning a share like that. And like I said, I don't want to try and pick tops or bottoms. So it's really, really interesting. I'm just scrolling back to when Air New Zealand first started and first listed back in January 2020, and that's really interesting. On listing day, it started at just over $7, $7.09, and today we're at 60 cents, 60.5 cents. To me, that is why I do not want to hold Air New Zealand. Also, historically, if you go back through and look at airline companies, they tend to be very, very volatile. You've had Virgin in Australia, you've got Qantas, Boeing at the moment. They're certainly featuring. There is a lot of speculative nature around airline companies in general, and to me, that's why it's showing what it is on the chart. So I hope that's helped. I feel like I've laboured the point a little bit, but those are the reasons why I would not be investing in Air New Zealand. It's on a downward slope, and it's not something that I would certainly want to get myself involved in. But hey, come back on Thursday. I'm going to have a look at a share that I've recently entered myself, and that's called Gentrack. And that's something that has been moving quite strongly, quite positively. So we'll go and look at something completely opposite and see why I like that share. So until then, have a great week, and thanks for joining.